Thank you for tuning to the market update with Russell Calkins for this August 30th, 2008, 9:49 a.m. Arizona time. Well, let's just go ahead and recap. I am no longer in the unleaded gas. We bought it at $1.97. I'll just tell you for the first time, I got out at $2.01. Okay. The I got out at 201. So we made fair money in the unleaded gas. On the Bitcoin, we made good money on the Bitcoin. We 7,097. I got out at 68.47. Now, I'm not recommending that you get out. All right. You can get out whenever you want. You can go for as much profits as you want. And I'm also not going to tell you where to put in stop losses. In other words, if it goes against you, I want out. That's all up to you based on the dollar figures that you have to work with. So we are no longer in Bitcoin. We are no longer in unleaded gas. So we're going to look at the lean hogs. Lean hogs. I'll put the most active month on the comment line underneath this YouTube video so you can actually look at the chart and you can look at the market that I'm recommending today, which is the lean hogs on the daily chart. All right, so be sure to click on the chart to follow along with the video so you can see what I'm doing. All right, real simple stuff. Bollinger Band, daily chart, Japanese candlestick charting, and also I'm using the fast and slow stochastics. The stochastics and the Bollinger Band are steady indicators. So on the lean hogs market in the most active month, currently at $50 or 50.55 cents per pound, or 50.55, down a penny per pound, or in other words, 1.94% down. I'm a contrary trader. The other thing to remember is whatever risk capital that you have for these type of endeavors, like the futures markets or the futures options markets, the way I do it is a commodity trading advisor, which I'm no longer a commodity trading advisor. I did that kind of stuff for 40 years. I wasn't allowed to own my own account. Now I'm allowed to own my own account. But I'm just giving you the recommendations as if I were still a commodity trading advisor, what I would do, how I would place these trades with your money, okay? So the last 75 trades plus, if you look at the YouTube videos, every single one of them made money. 95% of them phenomenal money, 5% of them fair money, zero losers, all right? Just to give you an idea, find one commodities broker that can call the market that many times in a row, and I would say to follow them and still follow me, but definitely follow them. If they're not doing that well, you want to pay attention to what I'm saying to you because, and I always recommend that you paper trade also. Paper trade means there's no real money that you're using. You can either put it down on a piece of paper and chart, these buy and sell recommendations, or you can get a TD Ameritrade or a Fidelity Trade or a Scott Trade or whatever platform you're using. And they'll usually let you paper trade with a small fee like $25, and then they'll actually fill your position in the markets. Okay, it'll be just a paper trade though. So that's how it works. But if you're in the futures markets and you're not doing so well, you definitely want to follow these recommendations. Now, nobody knows what's going to happen tomorrow. These could be the worst recommendations in the world. I'm just saying 75 plus trades in a row since I started the market update with Russell Calkins. Just amazing results, all right? Because I use simple analogies. I'm also a contrary trader. I'm not only a position trader, I'm a contrary trader. So if everybody's looking to sell lean hogs, I'm looking for a reason to stay on the sidelines with my sell positions or buy it or go long the lean hogs. In this case, we definitely want to buy the lean hogs at 49.72. So jot that down, 49.72. You want to be a buyer on lean hogs on the daily market. Currently, it's at $50.58. So you're only 3/4 of 1 cent per day from being filled. This is the third day in a row it's gone down. You want to be a seller on lean hogs at 59.04 cents per pound, or in other words, 59.04. Your fast and slow stochastics currently is your fast stochastics is at 4.82. Remember, 0 is as close to the bottom as you can get on the stochastics. Your slow stochastics is even 13.0. Anything below 20, in my view, is significantly oversold. Anything above 80 on your fast and slow stochastics is significantly overbought. Right now, we're significantly oversold. So we're at 50.6. By the time it gets to 49.72, providing it happens today, these will pretty much be maxed out on your stochastics. So again, you want to be a buyer on the lean hogs at 49.72. You want to be a seller at 59.04. And of course, past performance never guarantees future profits. Thank you for tuning into the market update with Russell Calkins. Be sure to tune in tomorrow for a brand new market, or unless we're able to dollar cost average the lean hogs. Now, let me explain what I was about to get into before, and that is you take the risk capital that you have for these type of endeavors, these type of markets, all right? And you want to divide it by 10. That amount of money, basically 10% of that money, now you want to take that figure and divide it by 4. All right, so you want to take 4 separate, if you're blessed enough to get $4 cost average prices against you, never for you. So in other words, if we get filled and the live hogs don't go lower, I'm not going to put in the second buy or the third one or the fourth one, of course. But if I acquire it at 49.72, and let's say it goes to 49.50 or 49.40, I'm going to recommend our second buy, and then at 49 our third buy, and then at 48.50, 48.75, I'm giving you examples on our fourth buy. This is a very rare opportunity when you get stuff like that, but that's why I'm saying if you use 10% of the money and then divide it by 4, you're able to do these things. All right, and may God bless you.